Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today, being Tuesday, we are expecting the markets to resume some high level of volatility as there's quite a lot of news that we are expecting. So before we make any progress, I would like to begin with a mic test. So if you can hear me clearly, can you type hi on the live comment section, and these will confirm that everything is working just fine. So let's begin right away. I would like to first mention that the dollar index started yesterday or the week, very weak. But then somewhere at the middle of the day, it regained some strength, basically reversing all our projections and at the same time creating some form of pullbacks in some major currencies as well as commodities. However, towards midnight, we have had the dollar index weakening. And the entire Asian session, we have seen the dollar index being really weak, which has meant the charts have majorly resumed some major trends. So for instance, if you look at pound USD, which had some news early this morning, you notice that yesterday in the morning, it was quite bullish. When the dollar index gained, it pulled all the way back down to 1.24988 before bouncing back strongly. And this morning, we are seeing yesterday's move being rejected or reversed. So there is a good chance we will be seeing the pound USD continue to make a recovery to the previous high before the announcement of the news later in the day, which is basically the US CPI. So very quick overview of the Asian session recap. We know that the Japanese index, or what you call the Nikkei 225 index, managed to cruise to a new high, a 33-year high. And this is quite interesting, especially for Asian pairs. And at the same time, we know that the Chinese People's Bank of China basically cut the reverse repo requirements to 1.9%. So a quick overview here: Japanese stocks climb, Hong Kong stocks decline, and Shanghai stocks are neutral. Asian market wrap. So on hopes that the Federal Reserve will pause its most aggressive tightening campaign in decades, an indicator of Asian markets gained along US and European futures. So once the PBOC cut its short-term policy interest rate to help the economy, the offshore yuan fell and Chinese bonds fell. The reduction in the 7-day reverse repurchase rate comes ahead of the PBOC's much anticipated monthly operation for its medium-term lending facility on Thursday. So Japan's topics index surged for that day, extending advances that had lifted the index to its highest level since 1990. So we are basically looking at 33 years high in the Japanese index. While South Korean shares are also advanced, Australia's benchmark recovered a tiny loss, but Hong Kong stocks dipped and Shanghai stocks varied. So when the Nasdaq 100 SP 500 ended its highest level since April 2022, congrats for US benchmarks climbed marginally in Asia. So increases in the Nasdaq, we jumped 1.8% overnight. We'll focus attention on Asian technology companies. So the 2-year US Treasury yield, which is sensitive to upcoming central bank movements, fell for the second day in a row. So on Wednesday, the FOMC committee is expected to keep interest rates in the range of 5% to 5.25% range. So this assumes that consumer price index data released later Tuesday reflect moderate inflationary pressure. So the possibility of a raise has increased in July, with swaps pricing in nearly a quarter point, further tightening by the next month's meeting. So basically, what we can see from the Asian session is the Japanese index cruising through a 33-year high. The Chinese bank basically cutting reserve requirements, which is basically quantitative easing to try and support the economy. And of course, we have seen a lot of optimism currently happening in US equity indices. So besides that, when we look at the economic calendar, we know that we had some news early this morning, and this was affecting the UK. And this is basically the claimant count change, which is basically the number of new people who are claiming for unemployment insurance. And in this case, we saw a very big drop. So if there's a very big drop in this number, it basically implies that the job market is very hot in the UK. So in this case, the number dropped by 13.6 thousand, meaning that the UK economy is creating a lot of jobs. And this is for the data for last month, that is the month of May. So as a result of this, we have also seen the average earnings index rise to 6.5%. This is quarter over year. And of course, the unemployment rate dropped to 3.8% compared to the previous reading of 3.9% and the expectation of 4%. So what this means is that there is a very hot job market in the UK right now. And as a result of that, there is a good chance that the Bank of England will go for a strong rate hike on its next meeting. So this led to increased bets that the pound would strengthen. So when you look at the charts, you notice that the pound has had quite a good Asian session, and perhaps we'll be seeing some further upside in the London session. So since morning, increased movement upwards, and then the long green candle indicates when the news was announced. So the pound continued to gain against the US dollar, and I expect to see the same in other pound pairs. So for instance, if you look at the pound trading against the yen, there was a big spike upwards. And of course, if you look at the pound trading against the Swiss franc, then there was a big spike, which was later rejected since there was a very strong resistance around this area. So somehow the pound was unable to break this resistance or this barrier against the Swiss franc, but for most other pairs, it was majorly bullish. So I will be expecting to see some further upside for the day, especially considering that we have quite a weak dollar index. So as we proceed, if you have any questions, feel free to type them in the Q&A section, and I'll be responding to those questions right away. So hello, Sue, I can see Wimab, Getere, Kangari, Patrick, Job, Rizi, thank you guys for joining in. Hello, Paul, Trapsked, Sue Jones, Margaret, Kevin, Rizi. I really like it when you guys respond to this comment section. And of course, if you have any questions that are relevant to the session, feel free to type them and we will be looking at them right away. So that being mentioned, let's focus on the most important news of the day. So having seen the pound strengthen against other currencies, now there's quite a number of news that are oncoming. So one, Italian quarterly unemployment rate rose to 8% from a previous reading of 7.9%. This is not good for Italy. So we will be expecting an economic sentiment survey for Germany and for the Eurozone. This will be happening exactly at midday, has the potential of causing some volatility in European pairs. Chinese new loans, this is tentative, somewhere beyond midday, but we don't know when it happens between midday and 1 p.m. So also M2 money supply data for China will also be coming up in between midday and 1 p.m. So NFIB, small business index for the US, will be coming up at 1 p.m. Then 10-year bond auction for the UK before we see the most important news for the day or the most anticipated news for the day, which is the US inflation data. So US inflation has been on a very good trend downwards. So everyone knows that the US has really fought this battle. So while most of our other major economies are still experiencing high inflation, for US, it has been considerably moving downwards. And this is a big, big win for the Fed, whose mandate is to basically control inflation down. So as you can see, the highest that we saw was 9.1% in June, which was reported in July. And since then, we have had 10 consecutive months where the inflation rate has been going back downwards. So the most recent reading was 4.9%, and we expect this number to drop to 4.1%. So if we happen to see this happening, it basically means that the Fed may consider holding interest rates at the current level, which is a range between 5% and 5.25%. So if the Fed does this, which would be the first time in quite a long period, then this would basically imply that we have reached peak rates, and there's a good chance we will be seeing the dollar continue to weaken and stocks continue to rally. So the meeting started today. That is the FOMC meeting. So tomorrow, this is when they will be going public with their rate decision. So exactly at 9 p.m., we'll see the FOMC federal funds rate, and this is expected to remain the same at 5.25%. So just a quick overview of what has been happening over the last couple of months. We'll use a line chart to make it clear. Interest rates were kept low during the COVID period at very close to zero, which was 0.1%. But then since then, we have had consecutive rate hikes for the last 10 sittings by the Fed. So the first rate hike was small, it was 25 basis points. 50 basis points. Then the next ones were basically 75 basis points each. And then in the last 3 meetings, you have had 25, 25, 25. So as a result, US interest rates have risen to 5.25%. And now everyone is assuming that the Fed will hold rates steady at that level. And as a result of this, we could be seeing the dollar continue to weaken, and of course, equities to start to strengthen. So we could be seeing a surprise. So a surprise is not off the books. So if the Fed goes for a strong rate hike, then in that case, we could be seeing the dollar resume strength. And of course, equities take a back seat. So we don't know this yet, but one of the biggest indicator that the Fed is looking at while it's making its decisions is the current data that we're expecting for the day. So that's why the CPI is so important, because if inflation jumps, let's say to 4.5%, 4.9%, or even 5% and higher, then the Fed must act. So in this case, there's a good chance that the Fed could go for another 25 basis point rate hike. However, if the number is close to 4.1% or even below, then in this case, we could be seeing some very good breather coming into the markets where the dollar takes a weakness and equities continue to rally. So that being the expectation for the day, apologies, I wasn't able to share that. So let's just check it quite fast. So sometimes it happens. So I'm hoping that everyone can see this now. So this is the US CPI, or Consumer Price Index. So for the better part of 2020 and 2021, inflation was rising as a result of the increase in money in the economy. We know that the US printed over $6 trillion. So as a result of this, inflation was rising, and it peaked at 9.1% in June last year. So since then, we have had 10 consecutive drops in inflation, and the most recent reading was 4.9%. So today's reading is expected to show an update of 4.1%, which would be a huge drop towards the target. So remember, the Fed is targeting 2% inflation rate. So if this number comes in stronger than expected at 4.9% or even higher, then in that case, the Fed will be forced to act and continue raising interest rates. However, if it goes as projected, 4.1% or even below, then the Fed may hold interest rates at the current level. So the Fed is meeting tomorrow. This is when we'll be seeing the news, that is the FOMC, federal funds rate at 9 p.m. So as you can see, what has been happening is that since holding interest rates very low, close to zero at the COVID period, so this is March 2020 through to March 2022, so for 2 straight years, the interest rates were close to zero. Then they started hiking interest rates to control the rising inflation. And for 10 consecutive meetings, they have been hiking interest rates. So first one was 50 basis points, and then they did 75 basis points consecutively up until the last 3 meetings, where they were basically doing 25, 25, 25. So the current interest rate is 5.25%, and this is the fastest rate hike in history. So with this in mind, we know that if inflation number comes in lower than expected, in this case, around 4.1% or below, then the Fed may consider pausing the rate hikes at the current level. However, if this comes in hotter, let's say at 5% or even higher, then the Fed may continue pushing this number higher, and maybe we could be seeing 5.5%. So everyone is looking at the today's CPI number. So as we get to 3:30 p.m., we will be expecting a lot of volatility coming from USD pairs, gold, oil, and US equity indices. So we'll be seeing volatility in the NASDAQ 100, the S&P 500, the Dow Jones, among other indices. And of course, all USD pairs are expected to be quite volatile after the announcements of the CPI data later today. So the CPI data is not just one data item. So we'll be looking at the monthly change. The monthly change is the shift between April and May. So the previous gain was 0.4%. In this case, we expect 0.2%. So if the number is bigger, then this could cause volatility, especially considering that the Fed could go for a stronger rate hike. So core CPI gained 0.4%. We expect another gain of 0.4%. So we'll be looking at the three data points in contrast with each other. And after this, hopefully we'll get a market direction. So luckily, today is Tuesday. So we will be having another session at 4 p.m. right before the US market open. So on the 4 p.m. session, we will be covering the aftermath of this news and try to identify a way forward. So make sure to join in on YouTube Live for the Markets at a Glance series. This will be happening at 4 p.m. So later on in the day, we'll be having a speech from Bank of England Governor Bailey. So this will be happening at exactly 5 p.m. Of course, he'll be talking about the hot labor market, where we just got the data in the morning. So he's due to testify about the central bank independence before the House of Lords Economic Affairs Committee in London. So we don't know whether he'll talk about economic policy, but it makes sense to follow the speech. I remember last week we had a speech from Swiss central bank governor, or who basically shared information that caused out volatility in Swiss franc pairs. So in this case, it's pretty much important to follow through this information. So tomorrow, before we get to the market snapshot series, which happens at 11 a.m., we will also have seen the GDP news coming from the UK. Of course, we expect a growth of 0.2% in the previous 1 month compared to the contraction of negative 0.3% the previous month. So this also has the potential to move UK pairs. And of course, it will not be the only news announcement. So at 9 a.m., we'll also be seeing construction output from the UK, goods trade balance, index of services, industrial production, as well as manufacturing production from the UK. So tomorrow, we'll also be seeing some good volatility from FOMC data, as well as a core producer price index in the US. So that being mentioned, let's look at a couple of charts before we end the session. So we have already seen the pound USD currency pairs. So it's time we look at other charts. So for the UK, the FTSE 100 seems to be trading in a tight range. So nothing much has been happening since we got to this area here. So it's more or less like a sideways momentum. So a lot of volatility could be coming up after tomorrow's GDP news. So it's something worth considering. So we have seen pound USD. So if you look at Euro USD, we know that the market is betting on a very strong rate hike on the next meeting by the ECB, which is happening later this week. And of course, if you look at this chart, it shows a market that is now forming higher highs. So if you compare the highs that they are getting higher, and from the most recent low to this other low and this other low, it's a market that is forming higher lows and currently attempting to break towards the upper side. So there is a good potential we'll be seeing some further gains in Euro USD, especially if the Fed was to cut interest rates. Sorry, not cut, but hold interest rates steady. So USD CAD seems to be holding on quite well, especially for this chart. So this being a major support level, we saw this happening yesterday. So we speculated that there's a good chance we'll be seeing a break. So we only retested the previous bottom, that is Friday's bottom, and the market responded quite well. So if you continue seeing a strong dollar, then this could be a nice bounce, especially on the 4-hour chart. But then we still have news to wait. So for USD JPY, we are still trading within the triangle. So pending orders on each of the sides might make sense, especially during the news. But if you're not aware of this, or if you don't enjoy trading high volatility, then this might not be the one for you. So gold managed to make an impressive comeback yesterday in the evening. Today, it continues pushing. And now, from yesterday's high to today's high, it seems like the 1964 price level is still quite important for this chart. So we will be observing it to see the kind of volatility that happens. And of course, the key price levels would be 1970. A break above 1970 would be nice because it would mean that the next resistance is 1983. And of course, a break below this area of 1953 would mean that we go all the way down to 1938. So as a result of the news that we will be expecting later in the day, more volatility is expected for gold. So this wouldn't be a very big surprise, seeing gold make an impressive run towards 1983 or even higher. And of course, if it's the opposite and the dollar strengthens, then a drop to 1938 might be in the books. And this is a real possibility for the day. So For Australian dollar against the US dollar has been making quite an impressive rally. So after yesterday's early morning gain, it pulled back downwards, but today continues pushing higher. But you have to be very patient and wait for the news. So the Nasdaq managed to make an impressive comeback and then a break above. So we are seeing one of the highest prices for the Nasdaq in years. So the last time we saw the Nasdaq trading at this level, this was in April last year. So it's more than 1 year since we saw this high again, and there's a good chance we'll be seeing some further upside happening in the Nasdaq, especially if the US was to hold interest rates level at the current range of 5% to 5.25%. So US 500 also managed to break out of these. So yesterday we expected some further upside, did not disappoint, and today it seems to continue pushing even higher, whereas we saw the cap and a handle pattern here happening in the Dow Jones. So for the Dow Jones, this is what we saw as our cap, and then the handle pattern, market breaks, retest, and then moves all the way up. So there is a chance we could be seeing some further continuation happening here. So depending on the outcome of the news, more volatility, and of course, some more upside could be expected for this chart. And remember, we have just had a higher low. And of course, from the forward chart, we just broke out of this channel. So in this case, a break above basically implies hitting the next resistance. And the base of the pattern, or the top of the pattern, seems like 34,277 price level. So as for Brent oil, there was a very big and sharp drop happening yesterday. So we started seeing some signs of weakness, especially from the first pin bar here. So the pin bar is indicative of rejection of lower prices. So it happened here yesterday in the afternoon. So trying to highlight this. So we also saw another one happening here. Apologies, just a moment. So this was an indication of rejection of lower prices. So today we managed to test that particular bottom at 71.6 price level. And from then you can see Brent oil making an impressive comeback. And there's a good chance we could be seeing some further upside happening here, especially considering that this is a major support level for Brent oil. So there's a first time, second time, and this is the third time we are testing here. So if we manage to see this as a bottom, then we could be seeing the price of oil starting to rally towards $76.5 per barrel. So that's it for the day. Let's see if there's any questions I missed. Which currency will be most affected by the CPI news? Obviously, it's the US dollar. So you have to find a currency to pair the US dollar with. How long does the market take to settle after news? It's usually a couple of minutes. If it's just a news announcement, a report such as the CPI, then within 15 minutes, the market should be settled. If there is extended volatility, then 30 minutes, it should be settled. Where is the DXY ranging and no big movements? The DXY is ranging because nobody wants to take a strong direction before the CPI and the FOMC news. So we know that Jerome Powell would walk the talk. If he actually goes for another rate hike, then we would have a strong direction up until the next meeting in July. But for now, there's a lot of indecision in the market up until we get the information. Which currency pair will be most affected by the CPI news? I don't know this. I don't. If I told you it's this currency, I would be lying. However, it's always the weakest currency in the market, traded against the strongest. So maybe there's a good chance it will be the USD against the Japanese yen. I could be wrong though. So just checking to see if I missed anything. So if CPI rises, then it basically means there will be bets that the Fed will go for a rate hike, so the dollar strengthens. So I hope that answers your questions. So last question was on Euro Yen. So that's the last thing I'll be checking before I end the session. So this is what we have in the Euro JPY pair. It seems like a market trading in some form of butterfly. So for those who know the bat pattern, it basically looks like this. So if I were to help you complete the pattern, this is how it would look like. So something along these lines. So maybe around here. So some potential pullback will be expected, especially once we get to this previous high. So something along these lines might interest you. So if you are not familiar with the butterfly pattern, then you might want to think about it. It's a major resistance level. So market seems to be strongly bullish, but there is quite a strong resistance along this area. So you have to be aware of this. And of course, the triangle that is currently happening on this particular chart. So this is quite a triangle to think about. So there's no breakout yet. So we could be seeing the market continue trading within the triangle or even straight out breaking towards the upper side. However, the Japanese yen seems to be really weak. So we could be seeing a breakout above this area here. But if that doesn't happen, the key important price level to watch would be right here, just above 150.886. So a break above, we go up, but if there is a bounce, then we go back downwards. So that's it for the day. Thank you very much, guys. Remember to keep sharing these videos with your community, and I hope to see you on the next session.